Hello, everyone. This is Steve from True Market Finance. Hope you guys have been had a good weekend, and hope you also were able to go over your um, debts that you have and things like that, and credit card debts and so on and so forth, and try to get things down into perspective. Get rid of those credit cards. Um, they're huge interest on those things, so they will eat away at your life if you don't get rid of them. So concentrate away at them and get rid of those. Um, Nowadays, with debit visas and things like that, you don't even need a credit card. We also are looking at 3 to 6 months of a reserve fund that you need to work away at. So you can all do it, guys. This just putter away at, take, everything is in this, is what we're trying to teach in this group here, is the patience. Nothing's going to happen overnight. So if you're thinking it's going to happen overnight, it's not going to happen. Your stock portfolio is not going to happen overnight. Your credit card debts are not going to disappear overnight. All you can do is have patience with every single thing you're going to deal with in life. Nowadays, with phones and internet and computers and iPads and um, everything, we've kind of got ourselves into this mind frame of where we uh, need everything now. Um, and so, especially our younger group members, like you've just had that all the time. Before, in the old days, we had to go to Blockbuster and hope there was a movie there at the end of the day. We had to go, into a CD shop and go through a bunch of CDs, and it took all those things took time. Try and find that perfect title that you wanted, or um, and it all took time. Now everything's downloadable instantly, and even in our stock charts and things, they're all done instantly. Um, and we got to kind of move ourselves back to a simpler time. That's why I like the Haganachi candlesticks. A lot of times, guys, you'll see me with them a lot because they take the noise out. But if we really wanted to go back into reality of life, um, we'd go into like a line chart. This is what the guys do in the old days. Each day they'd look at the newspaper and they'd stick a dot into their chart, and that's how they would um, figure out. Um, and that's ultimately what it is. We want to find the trend, and you can't find a trend in any stock out there in like a 15-minute chart or 5-minute chart. You want to go out here to these weekly charts. I like starting a lot of times with a monthly chart to get the full picture. This one's Bitcoin, but you can do this with any single chart. We could even take out all this other stuff or whatever, but our blue line is our stock. And with a monthly chart, and even with the indicators that I have on there for a buy and sell, look at how many there is. This is in a month since 2015. Look how many times. Zero, hardly. There's next to nothing. So we want to take our mind frames back into being patient. Be very patient with your stock picking. There's multiple stocks. That's why a lot of times, guys, I'll take us into investing.com, try and figure out, where those strong sectors are, so that we can start off getting a strong sector. And if we want to, and we got a long-term portfolio, you could buy that sector and then start inside that sector, start looking inside what stocks are working in your favor, and be patient. This is a 50-day moving average. We could have bought once here, once here, once here, and once here, and then when it came down below our 50-day moving average, you could sell it off. Myself and Bitcoin, I'll have it forever. Just because you can keep putting into it and you can keep growing it, but it's not something that's, well, I think it's like a currency one day here. So and that it's going to take some time. So then it's just peter away. It's kind of like your stock portfolio. You just add in, you just take a little bit and add in. Myself, I had some luck to put some extra stuff in, but if we go back out here, because we have the markets, we can go in here to like something like the NASDAQ, which is more commonly traded stock. We can pull this right out, and here we go. Now back here in 2007, we see how many times? It's not very many buys here along the way. So if you had a long-term position, which we all should have, we just be patiently wait for these times, and then we just add a little bit more to the portfolio along the way. When we come into these sells, we can put puts in here that cover our downtrend side of things till it changes out. We always want our 50-day above our 200-day moving average, and then we work it out from there. So we had NASDAQ. Oops, I hit the day there. We'll pull back in here to the week as soon as my computer wants to work for us, guys. Gels. There we go. And then so then we just work with that. So then I'll go back here to our Fibonacci, which I like. And you're gonna get these the 50 above the 200. We always want that. We can just have a long-term trend on that. See, these went below. You could have put a put in here and just follow this all the way down until it claimed back up here. This has been a all one put. Well, I guess not all one put, because you would roll them over along the way, just so it stays within. But it's all about being patient, guys. If there's no trade that day, there's no trade that day. You're not chasing stocks and burning through your account. It's going to be every single thing in our lives. We got to bring it back down so that we relax and look at then the big picture. So we saw the month, it was in an uptrend. Week, now we go into a day. Now we can see in the day is going sideways. So something you could do with sideways action is do puts and calls to cover your loss, or if you have a big account, because I know most accounts have unless you have a good size account, which is super handy dandy, especially if you have some stock in, you could do sell some calls and sell some puts, which they give you money for, which in turn you can then buy a call or put with that extra with that cash they give you for it, or you can just just use it for covering your stock as it goes down. So you could sell a call here and cover the bounce side, and then sell it out and then sell a call. So they're giving you money for here. So when this bombs back out, then you take that money